If you just watch the headlines, the S&P 500 looks like it's booming. But if you pull up the equal weighted version, where each company counts the same, you're going to see that it's barely even moved. It's not 500 companies that are rallying, it's 5. Reuters said it straight. They said, quote, a relatively small number of large stocks are propelling the market, end quote. And those are the AI giants. We're talking NVIDIA, we're talking Apple, Microsoft, Amazon, Google, Meta, Tesla. By October 2023, just 7 companies made up about 1/3 of the entire S&P 500. NVIDIA alone was close to 8% of the whole index, the largest weight of any company that we've ever seen. That means that when NVIDIA moves just say 1%, it can move your entire retirement account. That's how narrow this really is. And it's all built around a single idea: artificial intelligence. AI has become the lifeline of the entire market. Every earnings call, every headline, every valuation, every story ties back to AI. Now, at one point this year, roughly half of all S&P 500 gains came from a handful of AI-linked names. Half. Not 75, not 60, half. I mean, that's massive for an index that size. And here's the wild part. AI isn't just a story. It's becoming the new stimulus. Total capital spending for S&P companies hit around $1.2 trillion this year, the highest since records began back in the 90s. Almost 1/3 of that is coming from the same 9 companies building AI infrastructure. So even when consumer demand is flat, corporate investment in AI keeps GDP expectations alive. That's why valuations stay up. Not because of today's profits, but because of tomorrow's hope. You see, Wall Street isn't trading reality anymore. It's trading belief. The index isn't pricing current demand. It's pricing a story about future productivity. Capital doesn't need consumers right now. It needs conviction. It needs belief. As long as investors believe that AI is the future, then money's going to keep flowing in, even while the real economy struggles to breathe. That's the synthetic economy. It's not driven by spending. It's not driven by production anymore. It's driven by a story. And for now, that story's powerful. It's powerful enough to keep the whole illusion alive. But stories can only sustain belief for so long. But what happens when that belief turns into policy? What happens when markets stop being free and become fully fiat? Well, for 80 years, the formula was simple. You go to work, you earn money, you spend it, and that spending drives the production, which then creates profits and markets, consumption-powered growth. But now, the whole sequence has completely flipped. Just in October, the Fed didn't just cut rates again, they also hit pause on quantitative tightening. That's central bank code for we're not going to drain liquidity anymore. And liquidity is what lifts the asset